Hello everybody, welcome to another Daily Horizons view. The date today is the 1st of the 4th, 2019. We're cracking into a new month. We're having a look at our top fives for ASX Exchange Traded Funds. Today's spotlight is UBP ASX, which is a UBS IQ MSCI Asia APEX 500 ethical ETF. If you want to just check out the review, just skip right to the end of the video and you'll be able to just have a look at it there. Thanks. So a quick overview of the market. Today was an up day. We closed out at 62.99, which is 0.61% up. Consumer staples, materials, healthcare, financials, all up. On the metals side of things, pretty much everything was up. So gold, silver, platinum, copper was up. Petroleum, crude oil was up, and the others were a little mixed. Top 5 percentage rises: CETF, CE New, Food, UBP, and QHAL. So most people know the first two are China-focused ETFs. So the food ETF is the B Shares Global Agricultural Companies ETF. And that's hedged, and that follows the Global ex-Australia Agricultural Companies Index on the NASDAQ. BPB is our focus spotlight ETF today. So I'll have a bit more of a look at that later on. But as mentioned, that's the UBS IQ MSCI Asia APEX 50 ethical ETF. So QHUL is the VanEck Vectors MSCI World ex-Australia hedged high quality Australia ex-Australia ETF. So our top 5 percentage falls, we had VAP, MVA, UMAX, SLF, and VBND. Mainly, so property for whatever reason's down. So VAP, MVA are all property trust ETFs following property. We had UMAX that was down just over 1%. And that's the B Shares S&P 500 High Yield Maximizer Fund. SLF is the State Street Spider S&P ASX 200 listed property. So property got smashed, and also the VBND, which is the Vanguard Global Aggregate Bond Index hedged ETF. Moving on. Top $5 rises: IHVV, IVV, CETF, SPY, IKO. So IHVV and IVV are both S&P 500 ETFs, but IHVV is the hedged variant, and they're both issued by iShares. After that, we had CETF, which most people know is the VanEck Vectors China AMC SCI 300 ETF, and that's why I didn't say it before because it's a mouthful. So SPY is the State Street Spider S&P 500 ETF. IKO is the MSCI South Korea ETF, and that's issued by iShares. So sort of marginally up 100% today on not really big volume. So our top $5 falls: VAP, VHY, VBND, IGB, and VAS. So the Vanguard funds got a little bit clipped today. So as mentioned before, VAP is the Vanguard Australia Securities Share Index. BHY is the Vanguard Australia Shares High Yield Fund. Long both of those. VBND is the Vanguard Global Aggregate Bond Index, as mentioned before. IGB is the iShares Australia Treasuries ETF, and that one tracks the Bloomberg AusBond Treasury Index, and VAS is the Vanguard Australia Share Index, and that one tracks S&P ASX 300. Top 5 number of trades. We had VAS, STW, VGS, IVV, and AAA, all very well-known ones, all sitting in the top 13 or 14 largest ETFs today. VAS, which is the Vanguard Australia Share Index, has quite a few trades today. I think from memory it figured in the downside of things. So top 5 by volume. STW, Asia, CRED, QAU, and NDQ. So volume-wise, STW traded over 432,000 today, and STW is our State Street Spider S&P ASX 200 fund. Moving on, top 5 for value. STW again, VGS, IVV, CRED, and AAA. Just skim these anyway, so for those who don't know, we'll just have a quick look at CRED, because CRED's one that doesn't appear very often. So CRED is the BetaShares Australia investment grade corporate bond ETF, passive management approach designed to track the performance of the index. So that one is, from memory, is relatively cheap. Anyway, we had STW. There's quite a lot of volume. Quite a lot of value trades through because of the volume and the number of trades. So there's $25 million through the market today. Okay, everybody, let's get stuck into our spotlight, and it's on UBP, which is traded on the ASX. It's the UBS IQ MSCI Asia APEX 50 Ethical ETF. So this ETF aims to replicate the performance of the MSCI Asia APEX 50, excluding tobacco and controversial weapons companies. So before fees and all the rest of the rigmarole. So the MSCI Asia APEX 50 Index is a free float adjusted market capitalization weighted index that is designed to track the 50 largest stocks in the Asia. So that's excluding Japan. So some possible key benefits are international exposure. You can gain exposure to securities listed on a range of Asian exchanges. Gives you some diversification, so access to a portfolio of 50 largest companies in Asia. So obviously, again, excluding Japan, which is obvious. This ETF's a relatively low cost. Ease of access and liquidity, so you can trade the ETF on the ASX. Liquidity, well, I think these smaller ETFs do have some issues at times. Our net asset value as of Friday, I think it was 26.06. Today it was trading at 26.51, so it's actually trading just above the net asset value, not below. I haven't reread my slide properly. Management costs is 0.45%, it's not too bad. You get some income once yearly in June. The dividend yield is 0.01%. This ETF gives you exposure to the 50 largest businesses listed in Asia, and which are outside Japan, which is kind of what I mentioned before, going over things a couple of times here. So this ETF will give you exposure to the biggest tech businesses, the biggest banks, the biggest telcos in outside of Japan. But I think there actually are other better options. So I think we should be doing a little bit more research, because I think this one's a little bit too concentrated. So, with regards to diversification, I think you could probably buy an ETF with a little bit more diversification anyway. That's just my opinion. But other stocks ETFs to look at, I should say, Vanguard, VAE, and BetaShares Asia. Flick through this again. So your net asset value calculations down the bottom there if you want to calculate that. So just a quick overview of the top holdings. So Tencent, Alibaba, Samsung Electronics, Taiwan Semiconductors, AIA, China Construction Bank, China Mobile Limited, Ping An Insurance, never heard of those guys, Industrial and Commercial Bank of China, and Bayadu.com, some kind of e-commerce thing. With looking at country allocation, it's definitely heavily towards China, and if you put Hong Kong as China, which these days it is, it's skewed quite heavily, so 70% or thereabouts towards China. So just trying to give you guys some information so we can have the tools to crack our own financial sky. So yeah, if you like what we're doing, give us a like and a subscribe. As always, if you've got some comments or you would like me to look at something specifically in another video, an ETF, where I could go into more detail, just let me know. Thanks.